Ever feel like the stock market is some secret club full of confusing jargon, charts, and numbers? Like everyone else understands it except you? Well, what if I told you the basic idea is actually simpler than buying a pizza? Seriously. Today, we unlock the secret. This is Money Sketches, explaining what is a stock. Imagine your friend starts a pizza shop, Pete's Pizza. It's amazing, best pizza in town. Pete wants to expand, buy more ovens, open another shop, but he needs money. He needs capital. So Pete has an idea. He decides to sell tiny pieces of his pizza shop to the public. He takes his entire company, Pete's Pizza Inc., and divides it into, say, 1,000 equal slices, like a giant pizza. Each slice represents a tiny piece of ownership in the whole company. Each slice is called a share or a stock. Same thing. Now, you love Pete's Pizza. You believe in Pete. You believe the shop will grow and make lots of money. So you buy one share of Pete's Pizza stock. Maybe it costs $10. Congratulations, you are now a part owner of Pete's Pizza. You own 1/1000th of everything. The ovens, the chairs, even the secret sauce recipe. Maybe. Now, what happens next? Two things can make your $10 investment grow. Number one, the price goes up. Pete's Pizza does expand. It becomes huge. Everyone wants it. Because the company is now worth more, each tiny slice, each share is also worth more. Your $10 share might become worth $20, $50, $100. You can sell your share for a profit. This is a capital gain. Number two, dividends. Pete's Pizza is making so much profit that Pete decides to share some of it with his owners, the shareholders. That's you. He pays out a small amount of cash for every share you own, maybe 50 cents per year. This is called a dividend. It's like getting a tiny slice of the pizza profits delivered to you. So buying a stock is simply buying a tiny piece of a real company, hoping that the company grows or shares its profits with you. Of course, there's risk. What if people stop liking Pete's Pizza? What if a giant burger chain moves in next door? The company value could fall. Your share price could fall. You could lose your $10. That's why just buying one stock, like only Banana Corp, is risky. And that is why we often buy a whole basket of different stocks, all at once. Remember that magic basket? That is an ETF. It holds hundreds or thousands of different stocks, all spreading out your risk. So, a stock is a slice of the pizza. An ETF is a whole box containing slices from many different pizza places. Understanding stocks is the first step to building wealth, but understanding how to manage risk is just as important. Want to know more about that magic ETF basket? Click here to watch our simple guide and subscribe to Money Sketches.